Welcome traders, we're looking at the AUDCAD on the 4-hour time frame this morning. I've just opened a sell order on this pair based on this stop hit pattern that's formed right here at resistance. Okay, so as you can see, everybody that was short right here on this move, as the market starts to pull off to the downside, they put their stops right here. The market takes those right here in the stop hit taking exercise, and off we go to the downside. Okay, so if you've followed the other videos, of course you know how that works, the dynamics of this signal. So let's not discuss that. Let's talk about the stall here. Okay, so what we see is this big push, okay, and then the stall. When we get to this level, you can see what happens. The sentiment is all the traders stand with their hands in their pocket. Nobody really knows what to do. The market just kind of meanders right at this level, and then quickly, as the stops are all hit and the banks and institutions are basically selling, okay, the buy orders that were, the sell orders that were here, they got orders to buy back, and they're buying back from the banks and the big institutions who are selling, who are driving the market down fast right here. Okay, we get the little hiccup that pulls back before the move continues on to the downside. So this is in fact a target. As you can see, I got in at about a 50% retrace. That was by accident. I wasn't actually looking at this in time. Had I been looking at this, I would have opted for a 25% pullback. That's what I like to do. That's why I have my Fibonacci tool set for the 25% right here. Okay, I just place it on the high and the low of the signal, and the 25% is typically where I will enter if in fact that will give me the risk reward that I'm looking for. 99.59. Let me move this up. Yeah, right about there. So this would have been my 2 times target, and it's above this level, so it's a valid trade. Okay, but because I got the 50% retrace, I'm even better off than I would have been, because now if you look right when the market reaches the bottom of my signal candle, I'm going to already be 1 times profit. So that's fantastic. If you have the patience to wait for a 50% retrace, and you're going to limit the number of trades that you take, but you're going to really tighten up your spreads. So when you're new, that's something I recommend. Just doing a 50% retrace and making that your entry and your only entry, and doing that for a while and see how that works out for you. And then as you progress as a trader, you get used to looking at these signals, you get comfortable. At that point, start reducing that to 40, 30, 20%, and then at that point you can start looking at the size of the candle. And typically when you see a large body candle, you're going to get a deeper retrace. Okay, that's kind of the rule of thumb that I use at this point, at this juncture in my trading career. Okay, our 2 times profit target has been reached right here as the market plows right through this level and retest the established support level right here that's been tested 3 times already. So why not move down to this level 1 more time and perhaps break through it this time? Who knows? We're out of the market. That's all that matters, is that we place our profit target above this level. Okay, that's the key. One of the many keys to the system. However, if you follow the proper risk reward and the proper placement for your 2 times profit, and you don't get greedy, you're going to see consistent results. All right, so this is just another perfect example of how powerful this stop hit pattern really truly is.